This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. Starting a new fresh week here on CNBC TV18. You're with us here on Bazaar Morning Call. We're coming to you from the CNBC TV18 Motilal Oswal studios. There is so much which has happened over the weekend, taking off, of course, from where we left off on Friday, and lots of cues lined up all of this week as well. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, so much happened over the weekend, right? Of course, you had that India-Australia win yesterday. But apart from that, I think what's happening in Israel and the conflict with, Israel and Palestine is really... it's heartbreaking to see. It's one of the, I think, the biggest attack on human civilization, at least I have seen so far. The death toll as of now is over 1,000. And, your heart goes out to the victims, the families, people who've been separated from their loved ones. I understand that there is a lot of politics involved as well, but keeping the politics aside, nobody should be, witnessing or going through something as horrific as this. So, condolences to all the people who've lost their families, their loved ones. And of course, this is something that will have ramifications on global markets as well. But as of now, it's really, really heartbreaking to see.
Well, we're going to be talking about markets, spike in crude oil prices, trade relations as well. But for the good of humanity, we don't want to see anything like this happen, right? And de-escalation and just resolvement of this is
peace,
something,
right?
just peace, that's something that you're looking forward to. But during the course of the day, since, we'll be tracking business news, we'll obviously be looking at the markets. But, Sonia, on a brighter note, yesterday with regard to the sports action was quite encouraging. And on Friday, India went ahead and won the Asian Games as well, hockey.
Yes.
I mean, I'm an enthusiast, so there. So
total tally is 107.
More than 100 medals. So that's,
more than 100. So
that's very good. And last night, Sonia, Arsenal beat...
The Arsenal Man game. I was going to talk about that, but, somber things happening around. But, of course, that was a really good one.
After so long. Lovely.
All right, well, let's kick it off in terms of what people would like to know in terms of how things are set up this morning, right? And we have to start with, of course, not what happened on Friday in the US, but start with what happened over the weekend and absolutely tragic developments in the Middle East once again. I mean, more than anything else, it kind of underlines how fragile that region is, right? I mean, West Asia, Middle East, and the attack, one of the largest by Hamas on Israel, the retaliation, and of course, I mean, the rising death toll. The only hope is that, like the previous extreme periods, we've had one in 2021, one in 2014, one back in, between 2000 and 2005. This one is limited. So that'll be the big one that we'll hope out for. But, these events, of course, have sent a big risk jolt, right? Risk-off jolt, rather, to the markets. So when you look at the S&P 500 futures, the last I checked, they were down about 0.75%. Oil prices rose 4%. They almost hit the 5% level. With oil, of course, the big risk here is disruption to supplies, which, of course, as of now has not materialized. But markets, of course, would price some of this risk in. So prices have went up. Now, the bigger concern is that this kind of spirals out of control in terms of, a proxy war, right? Iran getting involved. There's a Wall Street Journal article this morning which talks about how, the go-ahead for the attack was given by senior leadership in Iran. But that's, of course, that story from the Wall Street Journal. But that's the big risk, that this kind of escalates out of control. Market reaction, I already mentioned what the U.S. sort of indices and oil prices are doing. But the Israeli benchmark index fell 6.5% over the weekend. So that's a big one. Let's rewind the clock back to what happened on Friday. I mean, had this not happened, you would have kind of come out with more confused kind of signals. And I'll tell you why. This, of course, is now risk-off. But you had the U.S. jobs data, which kind of completely smashed expectations as against the poll of 170-odd jobs to be added. The headline number went up 336,000. That's the most since January that we've had. Details like the unemployment rate, average hourly earnings, all of those were kind of mixed, in line, softish. But it's kind of hard to get anyone to focus on the details because the headline number is such a big one, right? Such a big, outlandish kind of beat. Now, the reason I said you perhaps would be a little confused if the events over the weekend had not happened and we were just kind of taking the handoff from Friday markets went up. The S&P 500 was up about 1.25%, almost 1.25%. So we saw what is a bullish outside day. Technically, it's a very strong indicator that maybe, the index, which has seen this pattern, will see continued gains at least for a few more sessions. The Nasdaq ended up about 1.6%, which was even stronger. The dollar index saw a bearish outside day. That's below 106.32. We left off at about 106.12 or so. Now, that signals that the dollar perhaps should be sharply lower in the coming days. Now, of course, events over the weekend and what has transpired will change some of this, but that was the handoff from Wall Street. Yields, they went up. I mean, Treasury yields, it's not as if yields also sold off. They went up 7 basis points to about 4.79. The high was 4.88, the middle of last week. So we're just about 10 basis points away from the highs. But, I mean, equities and other stuff actually did quite okay. Now, coming and tying all of this back to the market here, this is the rally from Wednesday's low for both the Nifty and the Bank Nifty. 300 points on the Nifty, and which is about, what, 1.5, little over 1.5%. And the Bank Nifty, which went up 500 points, that's just around 1.1% or so. So the rally on the Nifty has been stronger as compared to the Nifty Bank. This is from the lows on Wednesday, beg your pardon. For the Nifty, the next logical resistance is the 20-day moving average, which comes in at 19,787, which is, some distance away, but that's the 20-day moving average. That's the big one. On the downside, the attempt should be to close above the 40-day exponential moving average, which the market was able to take out with Friday's rally. That stands at 19,610. And then the low, of course, will come in, which is 19,333. Big 300-point gap between, that 40-day exponential and the low that we saw last week. Now, on the Bank Nifty, the resistance comes in at 44,717, which is the 40-day exponential. And then you get to the 44,983 level, which is the 20-day moving average. As I said, the Bank Nifty recovery has been a little weaker. Support for the Bank Nifty comes in at 43,857, which is the low that we saw last week. But also, it exactly coincides from, if you draw a trend line, from the lows of June. It's a slightly upward sloping trend line, and that meets the Nifty at about 43,857. The GIFT Nifty should come up on your screen. It's indicating a 40-odd point lower start. Not just because of what has happened over the weekend, but even, had that not happened and we were just picking up from Friday, U.S. markets were up, but yields were up once again, right? So it was a confusing kind of handoff, and that's the reason why I would say hold off, especially now that what's happened in the Middle East has happened. And I think we will be dealing with the implications of that over the next many hours and next couple of days as well, unless, of course, things diffuse pretty quickly. So, watch what the price wants to do, watch what the market wants to do. A couple of 100 points is what the market has done. But in the larger scheme of things, it's better to get clarity and then take positions one way or the other. The implied open, about 40 points lower. Sonia.
Absolutely. My point is that despite everything that has happened, right, the Dow futures are down about 200 odd points. Oil prices are higher by about 4%. Yeah. Yes, there could be a sell-off across the globe, but give and take everything, the GIFT Nifty is suggesting less than a 50-point cut. So this is definitely a buy on dips market. Yes, agreed that things could escalate over the next many days, but it would be prudent for you as a trader or an investor to look to buy every dip, because this market has been very strong up until now. So that could be the base case where buying every dip could be a prudent strategy. I'll tell you why. The Nifty has been very resilient amidst all the weak global cues. It closed above that 19,650 mark on Friday. The reason why you can perhaps choose to buy the dip is because FI selling has also reduced substantially in the last many days. There was barely selling of about 90 odd crores on Friday. And if you map the last 4 or 5 days, right, there was selling to the tune of 2,000, 3,000 crores in the preceding days. And just look at that, it's reduced substantially. So I think you should look for opportunities to perhaps get into the market if it falls further, because of a couple of more reasons. Q2 earnings also begin this week, and you have all the IT companies reporting their numbers. The big narrative is that the commentary perhaps from the IT companies could improve in this quarter. And if you factor that into the stocks, a lot of these stocks have seen a recovery as well. So we kickstart with TCS on Wednesday, then you have Infosys and HCL Tech on Friday. If there is a slight hint of a recovery in demand from managements, which is what the street is expecting, then that could be another positive trigger that we're looking at. So that's the big question. Is the worst of demand deterioration behind us? Could be. And what's the outlook for tech companies in FY25? The other positive that I'm looking at is a lot of business updates from corporates in our own, universe, which are very positive. So look at Titan. Revenue growth of 20% is what they've spoken about. TCS, of course, will be considering a buyback as well. So that's another thing to look forward to. Prestige Estates reported almost a 70% growth year on year in its total sales. So, the base case is that, yes, there is global chaos, but our own markets have been so strong that perhaps they could decouple from what we've seen. So maybe you should look for buying opportunities, at least in that, in good quality stocks.
Yeah, that's provided the de-escalation takes place out there. You don't want any kind of, further bad news coming in from there. So market participants will be looking at de-escalation of what's going on in Israel, and for the good of everyone as well, we're hoping for that. The global cues, well, they could be preventing the Nifty from moving to around the 20 DMA. After the last couple of sessions, well, it appeared that the 20 DMA was well and truly on, but it seems now it could be pausing a little bit, going by the economic data we're getting from the United States, as well as the conflict that we're seeing in Israel. For me, the biggest component is the Nifty Bank, which hasn't been performing. Even the last week, you'll see the Nifty ended mildly in the green. But the Nifty Bank was down close to around 0.5%. So that's been underperforming. That needs to perform to get the Nifty towards, closer to around that 20 DMA and then around the 20,000 odd mark. So that's going to be the key contributor. If today, in fact, you believe that there is going to be some money that's going to be moving to the Nifty Bank, that's going to lead the recovery. And besides the Nifty, we talk a lot about the Nifty, but the broader markets, there's a lot of stocks that are still doing very, very well. So be stock specific, look to buy good stocks if you're looking at buying from the broader markets. And even on Friday, you had an outperformance out there. We've been talking about, the FIs being net short and not being such a bad thing. Just take a look at what's taken place in the last few days. The short positioning has come down. Even on Friday, you saw some covering of short positions. And from, the middle of last week, when you had the net short positions of FIs go to around 92,000 short contracts, we have seen close to 8,000 contracts getting closed out. And that's why now the net short positioning has come down to around 84,000 contracts. Just a few sessions ago, we went all the way down to 19,330. And in that span, you've seen these 88,000 contracts getting closed out, and the Nifty bouncing close to 320 points odd. So having shorts in the system, in fact, it's proved to be a good thing. Nifty support levels, what are we looking at? Well, the first support comes in at around 19,500. I'll give you reasons for that. 19,600 put saw a fair bit of action. The premium at the start of the trade was close to around 100 points. The other factor is 19,500 put has the highest open interest. So that's why 19,500, if you have that appetite to go ahead and buy the dip, 19,500 becomes the first support level. The next support level is last week's low, which is around 19,333. The resistance level will be the 20 DMA, around 19,800 odd. So if you have the appetite, you should be looking at buying this dip. And you'll not want a 30, 40 point downtick. You'll want to buy a little bit deeper, maybe a 70, 80 point downtick, closer to around that 19,500 odd mark, and hope that the Nifty rebounds from there on.
Okay, lots to talk about and lots to digest actually with what's happening across the globe. Pretty gruesome images as well. We'll try and get you more details on all that's happening. But in the meantime, we have a market to trade. So let's get with it very quickly. On the equities front, first up, Chetan Seth of Nomura says the main focus will likely be more on the geopolitical events in West Asia. In particular, whether the conflict broadens out regionally and is long-lasting. In the Asian equity space, assuming oil prices surge in the days ahead, some major ASEAN net oil importers like India and the Philippines may underperform. That said, assuming this does not turn into a wider and prolonged conflict, they think it might ultimately be a buying opportunity for Indian stocks given the strong structural outlook.
All right, we have another opinion. This is coming in from Mahesh Nandurkar of Jefferies, who says that FY24 is headed towards a $35 billion plus equity supply, which is the highest ever, even without much funds raised by banks. The data for 9-month calendar 2023 has seen over 100 promoter or PE exits in deals worth $19 billion. 74% of these exits are PEs, large investors, and Adani sell-downs, which is healthy. The PE plus promoter holding in India is large, and in buoyant markets, such source of supply can't be ruled out. So unless FPI flows improve, they expect equity supply capping the near-term market upside.
Let's also tell you what's happening in the money markets and get you some views on the rupee. B. Prasanna of ICICI Bank says the dollar strength is ebbing a bit despite strong headline jobs data. Pressure on emerging market currencies continued due to rising US yields, but moderated owing to central bank intervention. Rupee remained in a tight range supported by RBI intervention. Hawkish MPC policy and pause in dollar rally should give a near-term relief to the rupee, while events in West Asia may emerge as a risk factor through a spike in oil prices. He expects the rupee to trade between 82.80 to 83.50 this week.
On bonds, B. Prasanna of ICICI Bank says global yields are consolidating at recent highs amidst strong payroll and economic data. Domestic yields inched sharply higher as MPC delivered hawkish pause with optionality of using open market operation sales, OMO sales, to manage liquidity, which spooked sentiment. With crude prices also posing a risk due to geopolitical developments, he expects the 10-year benchmark here to trade between 7.3 to 7.4%.
Well, a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But let's run you through the list for the time being. We're looking at Reliance Industries, TCS, Titan, MCX, Prestige Estates, Solar Industries, JOCL Corp, and ONGC. All of them will be reacting to positive news flow, while on the flip side, Bank of Baroda and Biocon that will be reacting to negative news flow over the weekend.